Hey everyone, welcome back to Corporate Decoder. Today KMT just filed an 8K about a dividend declaration, and I am seeing one detail that hints at broader financial health. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is announcing a small dividend, but the timing and specifics around it tell a little story about their cash management. This filing is from Kennametal Incorporated, a company that makes industrial tools and accessories. They have a market cap of about $2.9 billion and employ over 8,000 people. You might know them from their long history in manufacturing. The main event here is that on the 28th of April 2026, the board of directors decided to give shareholders a little something back. They declared a quarterly cash dividend of $0.2 per S-share. This means for every share of Kennametal you own, you'll get 20 cents. It's not a massive amount, but it's a consistent payout. Now, the important dates here are when you need to own the stock to get the dividend. You had to be a shareholder by the close of business on May 12th, and the actual payment date is May 26th. This is pretty standard dividend procedure. Looking at what is registered with the stock exchange, we see their capital stock. It has a par value of $1.25 per S-share and is traded under the ticker KMT on the New York Stock Exchange. They also have preferred stock purchase rights, which is a bit more complex and often tied to specific corporate actions or protective measures. This section is where the actual announcement of the dividend happens. It's pretty straightforward, confirming the $0.2 per S-share dividend payable May 26th to shareholders of record on May 12th. This is a common occurrence for established companies, signaling ongoing profitability and a commitment to returning value to shareholders. While small, it suggests the company feels confident enough in its current financial standing to distribute cash. This part of the filing just tells us what documents are attached. In this case, it's mainly the cover page in an interactive data format, which is standard for SEC filings. Now, there are no detailed financial statements in this specific 8K, as it is focused solely on the dividend declaration. And here at the end, we have the official sign-off. This is done by Michelle R. Keating, who holds the title of Vice President, Secretary, and General Counsel. This confirms the report is a legitimate filing from Kennametal Incorporated. Now, looking at this filing, the most interesting part isn't the dividend amount itself, but what it implies. A consistent dividend, even a small one, suggests that Kennametal is generating enough consistent cash flow to cover its operations, investments, and shareholder payouts. They are not appearing to be in a survival mode. This aligns with some recent headlines suggesting stability, for instance. There was news around May 1st about this very dividend being set. We also see mentions of earning dates and analysis, indicating the market is watching their financial performance closely. There was also a headline in mid-April questioning if industrial product stocks were lagging Kennametal, which points to KMT being a potentially stronger player in its sector. The fact that their stock price crossed above its 50-day moving average in late April is also a positive technical signal, often indicating a potential upward trend. When we think about companies like Kennametal, dividends are a sign of maturity. It's not necessarily a growth play like a tech startup, but more of a stable income generator. Big institutional investors like BlackRock and Vanguard hold substantial portions of Kennametal, and they often favor companies that can deliver steady returns through dividends and manage growth. These large holders, with over 11 million and 8 million shares respectively, are looking for stability and predictable income. What I'm really watching for with Kennametal beyond this dividend news is how they are managing their expenses and revenue growth in the current economic climate for industrial companies. While this filing focuses on a dividend, it's the underlying business performance that truly matters. A healthy dividend is a symptom of good health, not the cause. The risk I am watching is if there are any hidden pressures on their cash flow that this small dividend doesn't fully reveal, or if they are prioritizing shareholder returns over necessary reinvestment in their business. However, based on this filing and the broader context of their stock performance and institutional backing, Kennametal appears to be in a steady, albeit not explosive, financial position. They are a company that appears to be reliably returning value to its shareholders. Oh, and the research tools I actually use are linked in the description. They help keep this channel going, that is my take. Stay decoded if you found this analysis helpful. Hit like and subscribe for more deep dives, and join our Discord in the description.